Man, we hustle every day. We chasing people. At about that you Man, we hustle every day.
Greetings YouTube and welcome to my YouTube channel. I hope you're good. Nenomaila, Mr. M Trader, as you already know. So on this video I'm going to show you how to trade currency pairs profitable and find the best patterns. So before we go any further, can you please like and subscribe and hit the notification bell and do comment on these videos. And we're growing. I'm very thankful for that, and continue growing with me. Let us grow together. You already know we're pushing peace. Nenomaila, yeah. Okay, let's get into the market. So this is Euro USD. So what do we have here? So on our weekly, you can see overall we had this impulse, then we have correction, yeah. So we might be, let me delete this. So we have what here? We have, let me just zoom in, let me just full screen this. So we have our correction, then we have what, we have our impulse, then we have our correction. So we have our what, our first touch here, second touch here, and a third touch here. So meaning the market might be coming up because we have our first touch this side, second touch, third touch. We might be going here for our fourth touch, then shoot downwards, or remember we might also be going there to our with the 90% rule. If it broke this low over here, this because then the market was in a downtrend, remember it was in a downtrend, then it broke that trend, so we might be coming way to this high over here. We might be coming to this high over here. So overall this was a correction, then an impulse. So this might be what, an impulse, an impulse, correction, and impulse. So let me just delete everything over there. Control, okay, control, okay, then yeah. So I showed you why we in an uptrend for now, why we buying for now. So we're looking to buy until where? Buy until here, unless the market says otherwise, because we'll always listen to what the market tells us. What we see from the market, that's what we trade. We don't say, okay, I saw an impulse, correction, so the market might come down. So you never know, it might still go upwards because of what, it broke this lower high over here. Remember we had what, we had this downtrend, that's a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So the minute it broke this lower high, what should we now look for? We're looking for what? For buying opportunities. So there's a retest here, then we had an impulse. So we have another retest here, then an impulse. So another swing low and an impulse. So that's why we're looking for buys. So let me just delete again. What's happening? Okay. Okay, yeah. So overall we broke this downtrend. It has been trending down. Wow, if you took a trade from this one, this was the easiest trade, because then it was trending with this trend line and this flip zones. So you would have taken a buy here, buy here. Let me just use this, a buy here, okay, buy here, here, here. Yo, it has been beautiful, and I didn't capitalize on this. So it has been a beautiful trend. So you can see even now it broke that lower high, then it retested, then it gave you an impulse. How beautiful. So you see why Euro USD is one of the simplest pairs to trade, because it prints the basic principle of forex trading. So we know how we're supposed to be selling high and buying low. So we sell here, we sell here, we sell here, we sell here. So when we buy low, we buy after our retest, we buy way, market shoots up, come to retest, we buy. So overall you can see why USD is one of the simplest pairs to trade. So we get into the market. Okay, we can see on our weekly, we suppose if we don't get there, at least we should be getting way to this level. At least we should be getting to that level. So let me just draw this, because then I see it's respecting this line. So we have this might be our previous trend, so we're now in an uptrend. So we have this, so this might also be a correction, so it might be a correction then an impulse. So we'll see. So on our weekly, this is what we have. This is our low and this is our high. This is our high. So when you draw your trend lines and your wicks, always respect your when you draw your trend lines and your resistance and supports, always respect your wicks. Respect this wick, respect this wick, respect this wick, respect all those wicks, respect them. So you can see if you were trading with the touches, you had your first touch here, your second touch, and your third touch here, then the market shot up. So if you were trading also with trend lines, your first touch, second touch, and third touch, market shot down and went to your TP. So yeah, so for now we can see overall this is what we have. Then we go to our daily. So we can see, okay, our last weekly candle was an impulsive, it was very impulsive to the downwards. So we can see, okay, the sellers are now stronger than the buyers, because then overall it took out 3 weekly candlesticks. So yeah, it's the buyers are now powerful. So we go to our daily chart. So on our daily, we can see, okay, this is what we have. We do what, we go back to our wicks and we fix them. Okay, yeah, you can see, okay, yeah, it's now proper this side. Let's see, yeah, it's proper. Okay, this is what we have for now. So we can see, okay, we had this, the reason for this. So we had remember, if the market is ascending, it should be it should break downwards. If it's descending, it should break upwards. So we had this ascending formation there. So we had this this flag, then a breakout, an impulse, then a retest. I would have taken this from there to here, but then I don't trade if I get this type of setup inside what you call a smaller time frame. So I'm still going to the smaller time frame. So if I had this, I would have traded it only if it was on a smaller time frame, to where, to this level here. to where? To this next zone here, to the next zone. So yeah, this is why the market came down here. So you can see, okay, we had a flag structure. We can call this a flag. We can call this a bullish expanding, bearish expanding triangle. Yeah, we can call it those, a flag and a bullish expanding. Okay, then it came back and created what? Went back to the previous higher low. Okay, we had this trend. It was a higher high, higher low, higher high, higher low, higher high, correction. It gave us a correction, then we went down. So you can study this correction. You can see overall this one had been descending. That's why we went where? That's why we went up. It's almost the same thing. If you look at it, it's almost the same thing as this. This was descending, this was ascending. So the ascending went up, the descending went, the ascending went down, the descending went up. So that's why we had those trades here. So for now, you can see, okay, this is how we've been moving to the upwards. We've been in an ascending nature. We've been we've been doing corrections. So for me, in order to take a trade here, I would wait for it to let me go to the 4 hour. So on the daily, we now see, okay, we were ranging between these two lines. We've been ranging and it's been ascending. So we can see, okay, this structure was ascending and it's been ascending for about a week or more. Yeah, about a week and few days. Okay, we can see overall. Okay, then we broke that. Remember, we also have, I see the market was ranging here. So the market was ranging between these two lines. Let me just bring this line here. So the market has been ranging where? Between this line and this line. So these two lines, it's where the market was ranging. So we have our double top here. Then it might also have contributed to why the market broke out of the ranging. So we can see, okay, the market is now breaking lows. Okay, can see, okay, we had an impulse. Remember, in order to take a trade, you have to have an impulse and see a momentum in the market. So for now, we're not trying to catch an impulse while it's still impulsing. We want to see a correction right after the impulse. So for now, what I want to see is the market come and retest this level, then impulse backwards. Then you know that it's definitely going where? It's definitely going, if we were to enter there, it's definitely going where? In the long run, we're definitely going here, because there's also a broken structure here, broken market structure. We might be coming here to fetch orders, then shoot up. If you're trading with the smart money concept, you might also call this a broken structure. Then we might be coming here to take orders, then shoot backwards, back up. Okay, this is what we have on the 4 hours. So we go to our 1 hour. That's where I find my trades. So remember, for me to trade this, I already showed you how and why I would take an entry the following week. So I would wait for the market to come away and also study how the market goes back to retrace. So when the market goes back to retrace, the first candle shouldn't engulf the last candle that was impulsive, and also it should be going to retrace it should retrace correction with a correction. So if we get something like this, then we know we trading where at the break of this level, then we're shooting down, then we're trading the same length of this correction. So this would be my trade overall. So I would have something like this, then my trade, my risk ratio would be, remember I'm trading the height of the impulse, I'm trading this height, so I would enter where, right here, or where, or the last candle before the impulse, here or here. So I will be entering here with we can say 35 pip stop loss, then the same height of the trade, or here, if it's here, if it retraces to that level, then we're trading what, keep it 35 pip, or let's make it 25, then we have it like that, then the same height of the impulse. So we can also come here, yeah, we can just say here. So overall we have 1:1,8, or you might call it 1:2, 1:1,8. Or there's another point of interest here, the market might also come here, so we have an interest here. So if ever it were to go there, we'll be trading to where, to that same. So we have three point of interest. Okay, this is what I see on Euro USD. We can also check another pairs before we close the video. Okay, we have we're done here on Euro USD. So we're expecting the market to come, but then remember, we take the message from the market. Remember, this is also a correction, the way it has been moving. We saw that from the bigger time frame. So we're moving in this direction, in this correction. So it might shoot up, it might be going back upwards. So take the message from the market as loud as possible. That way you'll be profitable. Okay, now let's try something else. Okay, let's try Euro JPY. Okay, this is what we have. Okay, sorry for the lines. I've been also back testing my strategy. Okay, this is what we have on Euro JPY, Euro Yen. Okay, on the weekly, let's go to the weekly. Okay, you can see overall the market is in an uptrend. Okay, we have this correction, impulse, then retest, impulse. Okay, overall you have this nice structure, but then also bear in mind we're trending up. For now we might be trending up on the weekly, but then we have this let me just use this. So you have this. Okay, okay, always respect those weeks, respect those weeks like I said. Okay, Our video is now 19 minutes. Okay, hopefully this is the last pay. Okay, let me just be quick. Okay, we have this euro JPY, euro yen. Okay, this is what we have from the weekly chart. Okay, we have this. Then what do we have? You can see overall this is our uh, recent recent low, recent high. So market has been, this is our correction impulse, retest, impulse. So this is where, this is our flip zone. This is where we're expecting to take a buy. Okay, so we have this. Let me just do this. So you can see how euro pairs are very simple to trade. You can see overall, okay, we had that, and we have okay, like I showed you on the bigger time frame. Okay, mind the weeks. Okay, we have this for now. So you can see, okay, when the week ended, the market was still bearish. So you can see, okay, we had this impulse downwards, then correction, then impulse. So we wanna see the recent price action. So let's focus on the recent one. I already showed you and rephrased how I trade my strategy. So we have this for now. Some might call it head and shoulders. So we have this head and shoulder. So the market might come here, then shoot backwards, back up, or it might come to this level to complete that head and shoulder and give us another touch on this trend line, or reverse on the resistance over there. So we have this resistance over here for now. This is what we have. This is what we have. So we have that for now. Then let's go on our 4 hours. So on our 4 hour we have this. We have an impulse, correction, impulse. So we have this correction, then a retest, then an impulse. So I would have taken this trade, wherein I don't trade from the 4 hours, so wherein I would have taken it. Okay, so you can see the market might still be shooting up. Here an impulse, yeah, it might be shooting down. Sorry, it might be still shooting down. So we have this correction over here. Have this correction. Then remember I told you how the market corrects. It's very important. So we have this here, and also we have this, that, this candlestick over there. So I told you this candles, where I'm doing my rectangles, it's where I see interest in the market. And also this one. So I don't want to fill the chart with rectangles, but then you shouldn't just trade a flag or continuation pattern or a structure from just nowhere. Like, you should have a backup, a foundation, like something like this here. You should, okay, we have this candlestick over here, or we have this. Like, you shouldn't just trade here. If the market come and turn there, let me just throw it. You shouldn't just trade like, okay, let me just do this. You shouldn't just trade here. Here, let me just say here, there's nothing there. So focus on where there's something. Like, the market might be going there to fashion order. Remember, we have a broken market structure here, so it might be going up here to fetch an order and go and sell. So that's what we have for now. So we go to our 1 hour. So remember, for us to enter a trade, we need at least two impulsive candlesticks. But then for now, the way I trade with also remember, also that's why I don't really depend on one time frame, because then you might find that this is my impulse correction. It might be a correction, so I'll have to wait until it gets there. So while waiting, I might be taking this trades inside this trade. If it comes back, give me a flag, then continue upwards to that level, then continue, then we have a broken structure and a flag, then we come down. So this is what I would trade. So there you have it, M Traders analysis. You already know. nenomaila. Follow us on Instagram at M Traders, at nenomaila. You already know. And also comment and like and subscribe and hit the notification bell and let us grow. Thank you for stepping by and watching these videos. I hope you find them profitable to your knowledge and you find financial freedom. Bless M Traders. Logging out. Peace and I'm out.